Hello YouTube, welcome back to Chikwado Trading Academy. Now first of all, before I get into the video, I want to say a very special thank you to all of you for all your support, for liking the video, for sharing the video, for subscribing to the channel. The only reason we've come this far is just because of all the love and support that you guys have continued to give, coming back to watch our content, coming back to subscribe and all of these things. Thank you so much for all the love. Thank you so much for the kindness. And I really can't wait to get into this particular episode. Now, the reason, if you can see, I'm in my new office here at Chikwado Trading Academy in Lagos, Nigeria. And the reason that we're here today is because Tickmill has sponsored the academy to provide you free trading education. So what that means is that from now on, if you walk into our office, if you walk through our doors, you are going to meet me here live in person, and you are going to get free trading education from Chikwado Trading Academy, courtesy of Tickmill. So of course, you can sign up with Tickmill however you want. You can sign up using the link in the description. You can sign up on the website anywhere you want. Just sign up and then you come to the office here. As long as you're in Nigeria, you're in Lagos, Nigeria, you can always get free trading education from us. So the main reason why I wanted to share this video today is because it is so easy to get sucked into having your bias, to looking at the market a particular way, or you believe the market is going to go short and you're just sticking with that irrespective of what's going on, even when the market is showing you otherwise. When the market is showing you that it could be changing direction, it could be changing its mind, you are not looking at the market without a bias. So now the main reason why I want to get into this video and get into some chart work today, which we haven't done in a very long time, is to show you on the charts how you can actually analyze the market without looking at the market with a certain kind of bias, like looking at it, oh, it's going to go short, oh, it's going to go long. No, you have to learn to remove all of those things and be flexible with the market, because one thing I can tell you is that there is no amount of technical analysis, fundamental, any analysis in this world that you can call it, that will completely eliminate risk. There will always be risk on the table, of course, until you move your stop loss to break even, but there will always be risk on the table. So now, if you are trading in a business, if you are doing a business that always has risk on the table, you must learn to trade without a particular bias, knowing fully well that you could be wrong. And when the market shows you that you're wrong, the only option you have is to get out of the trade without emotion, without fear, without greed, without anything attaching emotions to your money, like, oh, I just want my money back immediately, and then you start to revenge trade and all of these things that amateur traders do. You must get away from that mindset. And how exactly you're going to do that is how I'm going to show you on the chart today, because we're going to be doing some chart work. I'm going to be looking at some currency pairs, and of course I'm going to be giving you some tips. So let's dive right into the chart. All right, so like I was saying earlier, there's no amount of risk, there's no amount of technical analysis or fundamental analysis or any type of analysis that you want to think of in this world that will completely eliminate risk. There will always be risk on the table. There's always risk for you in any business, in any venture, in anything you're doing. So it's not related to trading. A lot of people always say, oh, trading is risky. I mean, so is everything. So is going to swim. So is going skydiving. A lot of things are risky in this world. So there's nothing that completely eliminates risk in anything that we're doing. So looking at this particular chart on gold, this is gold on the weekly time frame. And if we quickly go over to the monthly time frame, you'll see that we have this set of equal lows here, and we've had this long impulsive push. We have this big bearish candle coming down on gold. However, since we have this, this is the month of July. This is the month of July's price action. And then you can see the month just has about 4 days and 6 hours left before it closes. And then we have this set of equal lows here that the market did not touch. So one thing that, right now, I think if you go down to the daily time frame or other time frames, this area is beginning to look like the retail support area, where there's going to be a cluster of orders, in these areas. There's definitely going to be a cluster of buy orders coming in from the retail world, who will be buying this as resistance, become support, and then the market has reacted off of this zone multiple times. There's a very good case here for the retail world to actually begin to buy this particular scenario, and that creates a whole lot of opportunity for the guys on the smart money side of things to get involved and then pick all this liquidity here. So if you notice, I have my eyes on this level, expecting the market to actually tag this low before going higher if we are going to go higher. Because now we get down to the weekly time frame proper. If we get down to the weekly time frame, this level looks too obvious to me, and I don't like this. I don't like any level that looks too obvious. For instance, I think there's an order block somewhere on the 4-hour or on the 8-hour. There's just an order block somewhere in here that I was really tagging. So now looking at that order block is not something I'm going to be interested in trading at the moment. Now there's a very good chance that I could be wrong about that, and then the market just comes, tags this level, and goes away completely and goes high, and then I'm not in the buy trade. But as long as I have this level that is so obvious to my eyes, this particular level here that is so obvious to my eyes on the monthly time frame, where the market could very easily just come, take out this low, and then start pushing higher, there's no reason for me to be looking to take a trade here when I know that there's a clear liquidity sitting at this level. So you can see in this instance, the market has definitely barreled down a lot. The market has definitely gone down a lot. This is if you go with the Fibonacci tool from up to down, this is the discount region. This is where you want to be buying this market, but at the same time you want to be careful and not get into any trade that is going to take you out, and then you see the market suddenly come back in your direction. So this is one piece of the whole thing. So now if you have a bias that gold is probably going to go short, which of course it has, do you want to be getting in to sell at this level? No. Do you want to be buying at this level? No. Because obviously, if you, depending on how you trade, if you trade support and resistance, you can put a support line here and build a good case to buy. But for me, a smart money trader, makes no sense for me to be buying here when I obviously have this level here that could easily take me up. And if in the instance, if it happens that I find a confirmation in this order block, if it happens that this order block miraculously produces a confirmation for me, do I want to take a buy? Let's say, for instance, for stop loss is not going to be that big. Do I want to take a buy somewhere here? Do I want to take a buy somewhere here and automatically aim for the moon from here? Oh man. Do I want to take a buy here and just aim for the moon? Aim for anything above here, and then start aiming for these highs when I take a buy from here? The answer is no, because I have this very obvious level at 1676.86. I have a very obvious level there, and it just makes no sense for me to expect the market to give me a very big rally from there. So this is where we talk about bias. So for instance, if I'm getting involved at this level, right? I'm getting involved at that level for whatever reason that I find. Maybe I found a confirmation at that level. The only thing I should be doing at this particular point is to look for probably a one-to-one, because you know very well that there's a very good chance that the market could do this, give you a little bit of that, and then come back down. And if you're not out of this trade at a one-to-one, it is going to turn into a loss. So how many times has this happened to you? How many times have you seen situations like this in the market? No matter how long you've been trading, this doesn't even have anything to do with your strategy of trade. It doesn't have anything to do with whether you're trading smart money, dump money, or whatever. It doesn't have anything to do with it. It just has something to do with being able to be aware of what is going on in the market and knowing when to stay the hell out of the market. I don't know why this thing is just going. And knowing when to stay out of the market, and knowing when to hold for longer targets, and knowing when not to hold for even longer targets. So these are some of the things that you might want to look at and just not get involved. And then you're trying to force the market to give you 1 to 10, 1 to 20, or whatever. The market does not work that way. You must know when to let go of a very, very big target and know when to let go of a small target. If you notice that the big target is going to drag you into a mess, you let it go, take something small and leave. That is just how I look at it, and this is how I've evolved my style of trading. Over the years that I've been trading, I've been able to evolve my style from looking for those big ones, those big wins, those 1 to 100s or whatever. And right now, I would take a 1 to 1, 1 to 2, and just leave the market alone. It doesn't matter as long as I'm funded, as long as I'm profitable. And by the way, I just hit 50K in funding with my Forex Funds. Very, very big win right there. And I took my first payout, took multiple payouts, taking 2 payouts already on the 2 accounts that I have with my Forex Funds, and it makes a whole lot of sense to, actually reach this level in trading. And the only reason I was able to reach this level is because of doing something like this, letting go of that big bias, that big desire to have such a huge profit target and all of those things, and just going for something that is realistic and according to plan and gives you at least a one-to-one within the market. So quickly going over to the S&P 500, I have something very interesting, that I want to share with you there as well. You can see, for instance, this is the S&P 500 on the weekly time frame. Okay, looking at it on the weekly time frame, it makes sense to be looking for buys within this order block. Not looking for buys, looking for confirmation. So if the market reaches this OB in here, this higher time frame order block, if I see the market trade into it, I'm going to begin to look for the type of confirmation that I like to see, and then look for buys from this particular zone. However, knowing fully well that this is where I want to take my buy, and then this area here, I know the market is looking like it's reversing. This looks like an order block, which clearly it is not an order block. Now, looking at this market, do I want to just take a buy here and expect it to keep going? The answer is no, because clearly the market has printed lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So it makes sense to expect the market to continue to print that and to print what I can see in front of my eyes, and not because maybe here you take a buy here and then you're expecting the market to just balloon through this area because you have a bias or because you've gone long here and then the market has gone in profit in your direction up to this point, and you expect the market to keep going and keep going. The market does not have to keep going. It's not run by your father. It's not run by your parents. So this is exactly one thing. And when the market, for instance, I reach this level and maybe I found an entry confirmation and I take a sell, and the market does not break through these lows and instead reverses here and gives me a sign that it wants to go higher, would I want to still hold on to that bias that the market is definitely going to get here? Yes, there's an order block to be mitigated somewhere here, but who says it has to be mitigated immediately? Nobody. It doesn't have to be mitigated immediately. So these are some of the things that, from my experience, I've seen that holding on to certain biases in the market, holding on to certain things that, oh, this has to happen, or that has, it does not have to happen. It doesn't have to. The market doesn't owe you anything. So this is exactly why I'm making this video, and I'm trying to show you that you have to know where to let go. There is no harm in letting go. There is no shame, because if you lose your funded account, or you lose your account, or you blow your account, or whatever, or any of those things, you are the one that's going to suffer for it. So it is not whoever it is you're trying to impress. The people you're trying to impress probably don't care. They don't even know you exist. So it makes no sense whatsoever to hold on to a certain kind of bias. Social media is not going to pay your bills. The people who you're trying to show that chart to or whatever, they don't care, to be honest, because you're not going to share the money with them if you actually hit the profit. So trust me, they don't care. So, and also I have something on Kiwi. On Kiwi here, I've seen that the market obviously hit this order block, and now we are moving higher on the pair. And personally, I'm expecting to see price at least trade into this area, and before we continue to sell off, because clearly this is on this side of the curve. On this side of the curve, we are in a downtrend. We are not here. We have this order block that was respected from the past. Yes, it was mitigated. Yes, but this particular price action that we have before us is bearish, and it makes sense to expect the market to provide a correction, because the market does not move in a straight line. All right. So it makes sense to expect the market to slowly trickle up, or maybe impulsively trickle up and continue down. Now, if the market reaches this level and blows through, am I going to be trying to look for a way to sell because I feel the market is bearish? Absolutely not. By then, it will simply mean we have a break in market structure, right? And we could retest the breaker block and go higher, or we could just come back down to the discount and premium level and go higher from there. It is accepting that you are not in control. This is the ultimate way to trade. This is the most peaceful way to be a trader. You're not in control. Accept that you're not in control and take the loss whenever it comes your way. If you have a loss, you take it and try not to revenge the trade. I took 2 withdrawals because, my account, I split it into multiples. I took 2 withdrawals out, and then I have a third 20K account that I'm here to take a withdrawal out of, and then it's in a drawdown. So am I going to suddenly try to start revenge trading the account, or trying to, just make the account spit out money, whether the account wants to spit out money or not? Definitely, I'm not going to do that. Like, there is no way in hell I'm going to do that. So this is exactly how you reach maturity in your trading. Accept that you don't have to be in control. You accept that you're not in control. Sorry. Accept that you don't have to be right every time, and you would trade with total peace. I can assure you, you're going to be trading with a whole lot of peace of mind in your game. So this is exactly what I wanted to show you. I think on GBP USD, do I have anything interesting? Nah, I don't have anything interesting on GBP USD. I'm not really looking at it. But overall, on gold, one of the reasons why I'm looking for shorts is I'm expecting this imbalance to get filled. This is a breaker block here. This here is a breaker. So I'm expecting to see the market trade back into this breaker and then continue to at least clear these lows. And if we do hit this order block here, trust me, this will be a very, very solid zone to look for some very nice buys that will probably come and tag these highs, because whether you like it or not, we have some relative equal highs here that are yet to be tapped. And the fact that you know that the market is going to hit a certain level, is going to hit this low, is going to hit this high, you have to also reckon with the fact that you don't know when that level is going to be hit. You don't actually know. But we know the price is going to do this, is going to do that at some point in the future. But when it is going to do it is something that we cannot absolutely tell for sure, irrespective of how you trade the market. So I hope this video has been very, very helpful. If it has, please give us a like, subscribe to the channel, and we're going to be bringing more beautiful content like this your way. Right now, we're in our office, so it makes a lot of sense that we're going to be providing content to you from our office here. We're going to be shooting lots of very professionally edited videos and all of those things. So I welcome you to subscribe to the channel. Our links to all our channels on Telegram, Discord, they will be in the description. Please join us on Telegram, join us on Discord. Lots and lots of valuable content over there. We share value, and I encourage you to be part of what we're doing. And if you're in Lagos, Nigeria, you can make it to our office here for free education. I encourage you to please come over, and we can't wait to have you. So once again, please don't forget to like, share, and subscribe, and I will see you on the next one. Cheers.